Good morning, one and all, and welcome to this morning's video. So, I have two pairs on watch yesterday. I didn't have anything on watch yesterday, or the day before rather, because the market looked like it needed to find its feet. The dollar related pairs, after some erratic price action, likely caused by Mr. Trump's inauguration, looked like it was. It looked like the dollar related pairs needed some time to settle, and they still do to some extent. But on these pound related pairs, it looks like we may be able to get some short opportunities. So, still letting these dollar related pairs settle a little bit, but monitoring them all the same. But on these pound related pairs, we may be able to capitalize on a couple of short opportunities. We shall see. But what I'm looking for today from these pound pairs is the following. So, we have just breaking this down from the higher time frames as I see it. So we had all of this consolidation here. Okay, if you watch my videos regularly, you will already have seen me break this down. And if it seems repetitive and a bit boring to you, then good, because that's what we need to do. We need to stick to a mechanical thought process. I had somebody the other day comment on, because of course these videos get posted on YouTube. Someone said to me, "So will you be buying at this level and then selling at this level?" And I thought, okay, well, if you've been watching my videos regularly or studied any part of them at all, you'll know that we don't just buy or sell when price uh, gets to a particular price. If it was that easy, we'd all be millionaires. I'll be trading market structure, which is what I say I will be doing in every single part of every single one of my YouTube videos. But if people want to use me as a signal service, then they can do that. And if they want to blow all their money that way, trading what they think they know how to trade when they actually don't, then that's up to them. But that's not what I'm advocating. I'm just trying to change people's perspective a little bit in terms of how they look at the market. Nothing more, nothing less. Anyway, I digress. So we have this structure here. After we broke out of that, we have the little footprint, okay? And after we broke out of this is where the aggression started, okay? Literally from here. That was the exchange of liquidity where this aggression started, not in here. So that gives me a clue that that is where the value is, okay? And the other clue is that we get a near miss to it, okay? We near miss to that area. The other clue is that we near miss to it again. And because it's a higher time frame liquidity point and an area of significance, it's no surprise to me that we break above, tap into where the stop losses likely are if people are looking to swing trade from this area, and then we get a very, very direct move. So what I'm looking at, if we just zoom out a little bit, it seems likely to me, given how aggressive this move has been and the fact that we are consolidating, you'll see this as I drill down, we're consolidating underneath this low here. That in itself is telling me that price did not find enough liquidity there to send it to the upside, which tells me that this underneath is likely just a consolidation to push lower to take out either this low or this low here, where there was a lot of volume there. Okay, regardless of which one we're gravitating towards, if that's the case, we can capitalize on a move to the downside in the meantime. So as I drill down, you can see we're pulling back, but overall, I've determined that on the higher time frames, I'm positioned well within here for a move to the downside. The next thing I'm asking myself is, am I positioned well on the lower time frames? Well, yes, because I'm asking myself, how have we moved up? Have we moved up impulsively? And did we move up from an area of value? No, we haven't tapped into any area of value at all, of significance, and we've moved up in a non-progressive way. We moved up there, we pull back 80% of the move roughly. Okay, we pull back there, we move up there, we pull back about 70% of the move. So this is not indicative of a move to the upside. This is an exhaustive move up. So therefore, if we tap into an area of value on the lower time frames, am I positioned well for a short trade? The answer is yes, because of all of these factors. And then looking at the sequence, what has the sequence been like on the way down? It's been very direct. Okay. The sequence has been very direct, tight consolidations into a little bit of a running channel. We drop out, but at no stage are we pulling back, significant portions of the previous impulse. So the sequence is good. Okay. We've got this. So I'm satisfied with that. The next is the entry. What's the entry look? What entry am I looking for? Well, all things considered, and even here, although this left a bit of a gap to here, it tapped into an area of significance here where we started to get an impulsive runoff, which broke the lows. Okay, and we near missed to this a couple of times. We then leave, once we broke this low, we leave a bit of a footprint. Okay, previously I was actually looking for entries from here, and this is important to touch on because this high was actually above this low, so it's not necessarily relevant. Okay, once this is above this low, okay, this may be the new area of value. Okay, because that might not be relevant anymore, and the clue was that we near missed to it once. Okay, but the clue that this was not the price wasn't going to commit from here, aside from the fact that certain things were happening on dollar related pairs, the clue for me was this. Okay, so this is not how we respond. If this is the area of value and this is the near miss to it, this is not how we typically respond if we're going to move to the downside from there. We would have seen something like, something like that. Okay. Okay. Instead, we got a corrective move down. So we didn't move down impulsively, we moved down correctively, which suggests to me impulse correction continuation. Does price have a reason to do that? Yes, because we have the little consolidation above. So now this does become relevant. And if we measure this, and I have literally just done this on the fly, if we assume the continuation leg out is of a similar length, that would take us up to this area. Okay. So what I'm looking for now is the following. I've just turned one of the spotlights off on my spot lamp just to see if that makes a difference, because when I watch these videos back for quality control purposes, often my face is lit up like a beacon. It doesn't appear to be at the minute, but often for some reason when I play these back, it is. I don't know why. But anyway, what I'll be looking for today, because this is the origin of, it's kind of the start of all of this consolidation. Okay. There's nothing above of any significance until all the way up here. What I'll be looking for is if we move into this area correctively, which we may be doing, okay, I'll be looking for a 4-hour risk entry or 2 1-hour high tests, okay, 1-hour high test rejections. Or if I don't manage to get that for whatever reason, I'll be looking for price to just impulse down and then a 5-minute correction afterwards. And then I would look to get short on the break or within it. And then down to this low, we would have about 4.5% to work with. Okay. And then down to this low here, which I've got my arrow pointed towards, my higher time frame arrow, we would have about 9.5% to work with. So that's what I'm going to be looking for from pound dollar. Okay, we may get something like this. We may just start to sell off again. Okay, we may get a corrective sell off. And the reason, why would we get that? Why would it look like that? Well, the reason it may sell off like that, if that's what it's doing now, is because the same reason we sold off correctively here is because the value was actually here. Okay, so we may get another corrective sell off like that. Okay, because of the fact that people are trying to sell this whilst the volume that is still up there is dragging price up. And then we get something like that. And then perhaps we get that. Okay, which if you just look at the given that this is a 1-hour chart, that would take a bit longer to form. Okay, if it does, I don't care. I'm not getting involved in these crap trades, which many people down here who don't understand price nature, i.e. how price is moving. That's what a lot of people are doing. They're getting involved in crap trades here, getting washed out. As price moves up, they're all getting washed out. Price does the same thing again because they don't understand price action. They think, as that gentleman did who messaged me the other day, they think you just buy at this level, sell at that level, and that's it. You're a millionaire. Yeah, okay. Well, good luck with that. That's why there's not as many millionaires as there should be, because you need to understand many things, including how price got to an area, not just whether it got to an area. Okay. So that is pound dollar. And then we have pound yen. So this is lower down on my list. And if I'll unpack why that is in a second. So on the higher time frames, what's the story as I see it? Well, on the higher time frames, okay, we tapped into that area, we pushed down, and we've kind of we pushed back above it, pushed down. So it's not as pretty, certainly not as pretty on the higher time frames, and we've left a bit of a gap to here. But what we do have is we have retraced this is the important thing for me. In terms of this move, so I'm looking at this move from here to here, we retraced 90% of that, okay? And that is not typically how price is going to move if we're then going to take out this high, unless we've tapped into an area of significance on the left, and I don't see one. So what that's telling me is that this is probably, given that we have a little footprint here, which just so happens to be the retest at the back end of all of this volume, that tells me that this is likely just a move to tap into that footprint, to then push lower, to take out this low, which this low near missed too, and then maybe from there, that's where we get something like that, okay, which gives us this kind of structure, which then taps into this, which we near missed to last time around. That's how I'm seeing it at the minute, and the clue for that was the fact that if we just zoom out, if I remember rightly, yeah, we had this weekly candle that completely smashed through the base of all of this. Okay, so that would mean, short trades into this to take out this low, that this low near miss two would be that would be good positioning on the higher time frames. If we once again look, you can see we're moving up. This is not an impulsive move up, certainly not at the moment. Okay, it is looking like a bit of a what we call a V shape, but there's nothing impulsive about this, and we haven't tapped into anything on the left to warrant a move to the upside. Okay, you can see where the sharp area of volume is. Okay, and if I just drill down, so if we tapped into this area, would I be well positioned for a move to the downside on the lower time frames? Yes. What's the sequence looking like? The sequence isn't great. Okay, if we just look at this, we've pulled back a significant portion of this, like 80-90%. Okay, so the sequence didn't start very well, and even on the higher time frames, that if we zoom to the left, the sequence isn't great either. So that tailors my entry a little bit. I'm not going to be looking for risk entries from the edge of structure here, especially when, which we didn't have on pound dollar, we have this. So if you look at all this volume here, okay, we have this here, which was also the base of this. So if we tap into that, we may tap into the back of this as well, just because it's close. Okay, so you run the risk of being tagged in, tagged out, price retest the back end of that, then drops, and then you're frustrated. I nearly said something else, but we'll use the word frustrated for family show purposes. So with all of that in mind, what I'll be looking for is the following. I'll be looking for price to tap into this area, but because of the sequence, because we have that sat just above, I'll be looking for a impulse down followed by a 5-minute continuation afterwards as a minimum. And then I would look to get short on the breaker within it. And that correction would confirm that we're not going to do something erratic, such as what we did here before we drop off. I was considering a 15-minute entry instead of a 5-minute, but I think if we tap into this and we retest the back end of this, and we retest the back end of this, and we push down and give a 5-minute continuation afterwards, I think you're probably waiting for a bit too much if you're also waiting for a 15-minute continuation after that instead of a 5, because for price to do that, to tap into this, retest the back end of that, retest the back end of that, give you a 5-minute continuation, and then do that, that's probably waiting for a bit too much, given how much liquidity it would likely have tapped into by that point. Okay, and also if it has, this is another thought I had, if price has tapped into all of that, all of the liquidity that was there, the retest the back end of that and retested the back end of that, it likely, in a lot of cases, it won't give you a 15-minute continuation because of how much liquidity it's actually tapped into. So you might only get a 5-minute continuation and be able to get short on the break or on the break of that before price is all the way down here. Okay, so just factoring in all these things, and then in this instance, what I would be able to do, I'll be able to manage it down to this first. I don't think this holds much weight. If we've retraced, if we get all of that, by this point we will have retraced about 70% of that move. So I don't think that holds much weight, but as a first inflection point, we would have 4.8 down to there, and then down to this low, we would have about 8% to work with. And I would do what I usually do in such instances, measure the 90% range, set the take profit at the 90% range, which would give us about 7% to work with. And that is it. That's what I'm going to be looking for from these pairs. And no, if anybody else wants to ask me, I won't be buying at this level, selling at that level without any confirmation or structure whatsoever. That's not how we do things in trading. It is how a lot of people do things. That's probably why they blow all their accounts. But anyway, that is what I'm going to be looking for. And of course, as I always do, I will bring you a trade recap if I actually place a trade on either of these pairs. But for now, have a great day, and I shall speak to you again soon. Thanks for watching.